Let's bring in right now from Arizona, Robert Grosse, a business professor at the Thunderbird School of Global Management at Arizona State University. Last night in the president's address, Professor, I noticed he said the following: "This is not a financial crisis. This is a moment in time we will overcome." Is the president accurate on that? This is not a financial crisis, or do you feel like this is a financial crisis?
Well, it's certainly not a financial crisis along the lines of the 2008-2009 crisis worldwide. It is a crisis. It has impact on people in the short run within 2020, but the financial crisis that started in 2008 caused massive job losses, unemployment above 10% in the United States for over a year, about a year, and we're not likely to see anything like that in this instance. It's tough to say, though, what is a short period of time as opposed to a long period of time. For a virus, we just don't know. It's not the same as any previous virus, so you can't say it's going to have the same life span or lifetime as a particular disease in the past. But certainly it's not on the scale of the 2008-9 financial crisis.
Sir, Professor, the president also mentioned last night in his address the small business loans, possibly totaling $50 billion, deferring tax payments for people and businesses impacted, payroll tax relief. These items put together, do they help Americans?
Well, I think that the important issue is the demonstration that the government is paying attention to the fact that companies are losing business, for example, restaurants and hotels and airlines, and that's very real, very imminent. That is, it's happening right now. So you do want to respond to those companies. Some of them are small, some of them are large, but by demonstrating that the government is doing something, the specific spending or the specific tax cut or the specific increase, say, in the Federal Reserve money supply or purchasing bonds in the market, which increases the money supply, are all desirable steps, but they're much more to demonstrate to people that our government is taking a proactive step. It can't cure the virus. The government can't cure the virus, but it can take steps that support the economy, and that's exactly what is happening.
So then when you look at the numbers today, were you surprised by the reaction by investors there and where the market is right now?
Oh boy, no, I'm not surprised, but I also wouldn't be surprised to see the market tomorrow go up by 1,000 points.
True.
We're talking about the Dow Jones.
Right.
Because it's very volatile. I think you said that in the way you phrased your question. So we'll see ups and downs, but until we see an expectation that the virus is going to tail off, then I don't think we're going to see as many ups as we see downs.
And you know what, Professor, there is talk about this virus disrupting the global supply chains, kind of tipping the economy into a recession. One, do you think that's going to happen? And two, because I feel like this is all getting hit from two sides: the supply out there across the globe and the demand. You know, the supply's maybe not there because companies are shutting down. The demand's out there because, I'm not going out and I'm not spending money right now. People are staying home.
Okay, there's no simple answer there, but on the manufacturing side, when you're talking about global supply chains of producing goods, the supply chains in Wuhan that go through Wuhan and China more broadly are already being re-established or reopening. And so I think that when you talk about a recession, I don't want to be a pedantic academic, but a recession means three-month periods in a row where the economy grows negatively or doesn't grow at all. I don't expect that that's going to happen in 2020. I don't have a crystal ball, but a typical health instance like this does not last that long in pushing the economy into negative growth. So I don't expect to see a recession, but certainly the growth rate of the U.S. economy this year is going to be lower than what was anticipated a month ago and what we saw last year.
But it's still going to be strong toward the end of the year, would you say? The growth of the economy.
I definitely agree because, yes, the global supply chains that you asked in your previous question are affected, but not in a medium or not even in a medium-term way. For example, there may be a drop-off in tourism in the United States that could go for 6 months to 9 months easily. That's not happening in manufacturing. I mean, it's not going to take long for iPhone assembly to recoup its previous rate in China, and distribution through airplanes to get the iPhones to the customers will be recuperated within a month or maybe 2 months at the outside.
What do you think about people at home? You know, they have their 401ks. They don't know whether or not they should look at them. People who are closer to retirement, should they be concerned right now based on what we're seeing, or again, just kind of ride this one out?
Well, I have to smile at that. If you expect your retirement to only last the next 6 months to 12 months, then I guess you better start worrying. But if you expect to be around for more than 1 year, I would do nothing with my portfolio unless you're a stock market speculator and you want to play the ups and downs that are going on right now as a speculator. But in terms of a safe nest egg, I definitely would not adjust my portfolio due to the coronavirus.
Leave it as is. Airline industry, I mean, it's an interesting, we've talked about tourism a lot on our show, and airlines are getting a hard hit. How long will it be more difficult for them to recover from what we're experiencing compared to other industries?
Yeah, I think airlines and hotels and restaurants are going to be suffering easily for 6 months. And I don't have a crystal ball, but just looking at previous viruses and previous health problems, I can see people reacting initially, which is right now, and then having a memory that lasts for several months, even if the challenge of the virus drops off dramatically. So people will not choose to travel as much or to go out as much to the restaurants or stay in hotels. And it could easily last half a year. But we're not talking about an extended period like after the financial crisis. Sorry to return to that example, but I mean the downturn there only lasted less than a year, but the time it took to recover was several years, and I don't see that in this instance at all.
Okay, Professor, great information. We appreciate the conversation. Thank you very much for your time. We are coming up to the top of the hour here, and some of our viewers may be stepping away to other programming. We are going to be continuing online on your local Fox station's website, of course, and social media platforms.